Hello, everyone in the middle of the market chaos. Rumors of a stock price that is so bold and out of the ordinary that it challenges the status quo. Are you ready for a trip through numbers? What if I told you it's higher than you think? Trends and expectations that will help you figure out why the price of Tesla stock is so high target. In this video, we'll show you a well-researched prediction of where Tesla stock will go in 2024 based on solid calculations and fundamental valuation. This isn't just a guess. There are good growth prospects from where it is now. We'll also talk about what the market expects from now until the end of 2024, when we have more information about the economy and the Federal Reserve's policy. After a big company reported its earnings for the third quarter, the direction of the forecast is becoming clearer. Lastly, we'll look at Tesla's long-term option positioning, checking to see if the bets are on the stock going up or down or staying the same. This insight could be useful, but before we start, don't forget to hit the like and subscribe buttons and ring that bell. Without further ado, let's dive into the market insights. Recent economic data points to a labor market that is neither too hot nor too cold, indicating that a slowdown is not far away. Interestingly, the Federal Reserve has taken a bullish stance, indicating that policy could change based on how the market performs. Usually, the Federal Reserve would wait for inflation to stabilize at its target rate of 2% before thinking about lowering interest rates. However, Bostic's insights suggest that the Fed may be more proactive, potentially starting rate cuts sooner. The path of inflation seems to be aligning with their long-term goals. This proactive move could be a response to economic pressures and an effort to boost growth, showing a more flexible approach to monetary policy than in previous cycles. By the second half of 2024, inflation is expected to reach the Federal Reserve's target, creating a better financial environment for tech companies to make money. Even though there have been some changes, the narrative is still strong. For example, Apple has reported a drop in sales compared to last year. This has not caused a bigger market loss. Overall, the tech sector's good success shows that it is strong and can handle the current economic problems. The market's response, or lack of response, to Apple's drop also shows faith in the sector's fundamentals and its ability to weather the storm. Investors seem to have taken in and made sense of the earnings reports. Keeping a straight course, even though financial results have been mixed, this reaction from the collective market shows a cautious but steady optimism in the tech industry's long-term growth potential. People see decline as a market disruptor because it can happen at any time and has the potential to in 2022. When the economy started to slow down, the markets, especially the Nasdaq, became very unstable. This was mostly because of the Federal Reserve's fast rate hikes, which made people worry that a recession was coming. In the past, markets have done well during slow rate hikes, cycles like the one from 2005 to 2008. It's the speed and unpredictability of a recession that makes markets uneasy. When real signs of a recession show up, like a weak GDP or low payroll numbers, the current lack of clarity about the length and seriousness of the possible recession tests the market's ability to bounce back from bad news. People think that these kinds of worries might come to the fore in the first quarter of 2024, which could cause a markdown and force the Federal Reserve to lower rates. The outlook for the end of 2023 and the start of 2024 isn't very good. Some metrics, like the Atlanta Fed GDP and OutTracker, predict an economic slowdown and maybe even a negative GDP. The consensus is that the economy could see a sharp drop from the 5% growth rate. Despite these predictions, earnings that haven't really shook the markets have made the current stance more strategically bullish, with a Federal Reserve that is supportive, dropping Treasury yields, and the hope that inflation will go down. People are cautiously optimistic. However, this cautious optimism is tempered by a plan to keep cash on hand in case the market drops when recession fears come true. Assuming that a recession happens and its severity is known, the markets may rise, especially in the second half of 2024. This is because of low federal fund rates and the resulting increase in liquidity. Interest rate-sensitive sectors, like those related to Tesla, are expected to do well in this kind of environment. This means that while the beginning of 2024 may be difficult, it could set the stage for a strong bull market as the year goes on. EPS could be higher than current estimates if these things happen as expected. Elon Musk's focus on making monthly payments affordable no matter how much the car costs suggests that Tesla may raise prices as it becomes cheaper to borrow money. This pricing flexibility is seen as a key part of Tesla's business strategy, especially if interest rates fall and make loans easier to get. When we look at the low EPS forecast from Wall Street 3 months ago, which was around $5, the forward price-to-earnings PE ratio for Tesla is about 58. Using this PE ratio and an EPS of $4.80 gives a possible stock price of about $278 to $840 for the next year. However, since the current PE is around 70, a more realistic expectation might be higher if Tesla's forward PE reached 90, which would mean that EPS grew significantly and interest rates fell. In a scenario that is both cautious and optimistic, Tesla's stock could possibly hit new highs, maybe around $432. A 2% rate cut could lead to an EPS of $515 and a P/E ratio of 75, which could mean that the stock price is around $3,862,500. This would be an increase if Tesla raises prices only a little and handles its growth costs well. In the worst case, an EPS closer to the current Wall Street consensus of $394 could happen. If you multiply this by a price-earnings ratio of 70, the stock price might be around $275,180. This would mean that prices haven't gone up, demand has gone down, and supply numbers have just missed 2.3 million. As a result of Tesla's price increases and stable demand, the best-case scenario for the stock price would be an EPS of $540 and a P/E ratio of 80 to 90. The price could range from $432 to $1,486. If the EPS reached $6 and the PE hit 90, the price could soar to $1,540. These figures show that Tesla's EPS is a key factor in figuring out how much its stock will cost. The uncertainty comes from not knowing how future spending will affect normal selling prices. However, predictions show that Tesla's stock price could go much higher than its current value, with gains ranging from small to huge. People think that the current market price for Tesla, around $1,220, is a good time to buy. However, the price is expected to drop at the beginning of 2024 because people are afraid of a slowdown and the market tends to overreact to news cycles. Even so, the prices that people think Tesla will reach by the end of the year are based on simple math that looks at the company's earnings per share, EPS, and price-to-earnings ratio, PE ratio. The analysis thinks about a situation in which Tesla's PE ratio, which is 70 at the moment with the federal funds rate at 5.5%, could get a lot better. This is likely to get better because of a number of things, including Tesla's growth rate picking up, better profit margins, price hikes by Tesla, and a possible drop in the federal funds rate. This argument says that the low estimates might not fully show how much Tesla's stock value could go up in the long run. The market is clearly bullish on Tesla, as there is a lot of call activity seen for different strike prices up to 2025. Also, the calls are significantly outnumbered by the puts, with a 21-to-1 ratio that shows how optimistic the market is about Tesla's future performance. That's all we have to say about Tesla's financial outlook and stock potential. We looked at the things that might cause Tesla's stock price to go up, like higher growth rates, better margins, possible price increases, and lower Fed funds rates, even though there might be market jitters in early 2024 because of worries about a recession. With all of these choices, the long-term outlook for Tesla looks good. Market showing a strong desire for growth now. We'd love to hear what you think. What do you think about the chance that Tesla's prices will go up in 2024? How do you think the Federal Reserve's interest rate decisions will affect Tesla's stock? Are you going to change how you spend based on what you think? Post your replies below in the comments, and don't forget to like. If you want to get daily stock updates and smart market analysis, subscribe to Tesla Stock News. Thanks for watching, and we'll see you in the next video.